Hi, everybody. So as you guys have all probably learned, we got the details around the Trump tariff package a couple days ago. And the tariffs were larger than expected, and the market has not reacted very well. Market sold off 5% yesterday being April 3rd, Thursday, so today's Friday morning. Um, so I've spent hours on conference calls last night and this morning with various research firms, just getting their input on the tariff situation. And the big takeaway is nobody knows. Nobody knows the intent of the tariffs. Are they going to be a negotiating tactic? Are they temporary? Are they going to be there for a while? We just don't know. And we don't know if today's the bottom for the market or how much further it's going to go. But so I did want to point out, if the market's already down double digits, if you are inclined to de-risk your portfolio, it's probably not a good idea to sell stocks when they're already down double digits. We'd be more inclined to buy stocks at this point. But if you're still working and you're not retired yet and you're still adding to your portfolio, just view this rough stretch that we're in right now as you're buying cheaply every time you add to that portfolio. Uh, if you are retired and you're living on your portfolio, and I think I covered this in a video a few weeks ago, but obviously it's a much more scary situation to watch the market drop when you're living on the money. But just know when we have to sell something to send you money every month, we're not selling stocks. We don't want to sell things when they're down. We're selling from the bond side of the portfolio, which is doing great. And if you look at, if you're in a 60-40 portfolio, if you look at the actual dollar amount of bonds that you have, we could probably send you money for several years before we have to touch stocks. Now we don't think this current stock market situation is a years long thing, but hopefully it's resolved in weeks or months. But we just don't know. So the point is, don't let it affect what you're doing. Don't let it make you not go on vacation this summer because you're worried about the stock market. We're not taking that money from the stock side of your portfolio. So I do want to point out some of the silver linings and what's going on right now, and that is the bond side of your portfolio is doing great. So if we just look at stocks from the high water mark, they hit their peak on February 19th, and as of close of yesterday, they were down a little over 12%. During that same time period, the bond market is up almost 3%. So 3% gain in bonds is a lot for roughly a 6 week time period. If you were in our 60-40 qualified model, you lost about 6% during that same time period. So the bond side is finally doing their job. And I say finally because if you go back to the last time we had a big market correction, that was the year 2022, stocks lost about 20%, bonds lost 13% that year. So you didn't have anything in the portfolios that was making money that year. This year, as of yesterday, close of yesterday, stocks down 12, which is not as much as we lost in 2022, but your portfolio is holding up a lot better because we've got bonds they're finally doing their job. A couple other things that are helping, the stock rotation piece of your portfolio rotated to cash back in on February 28th. And that if you're in our 60-40 model, that's roughly 8% of your portfolio that would normally be in stocks is in cash. So that has helped in the bond rotation piece of your account. The bonds have been pretty conservatively positioned, pretty defensively positioned. But just a few days ago, one of the pieces of that bond rotation moved into a long-term treasury ETF. Long-term treasuries are very interest rate sensitive. So if interest rates go down, they will go up a lot. And that's what's happened in the last 3 days. That particular position has made over 1% in just 3 days, which is a lot by bond standards. So the portfolios are positioned pretty well for this rough patch that we're in. But the fact that we've got bonds really doing their job, helping to offset some of the losses from the stock side, it's really a 6% drop during that time period for a 60-40 portfolio is not that bad in the grand scheme of things. So we just wanted to give you some good news and just tell you, don't panic, don't move to cash when the market's already down over 15%. We will get through this debacle just like we've gotten through everything else that the world has thrown at us. There's never been anything that our economy and our stock market did not recover from. So just hang in there and have a great weekend. Thanks, guys.